What is the greatest high-yielding dividend ETF for income that is also free of being considered a dividend trap? Because it seems like the further you get when researching what high-yielding ETFs are available to invest into, over time the more I come across just seem to be dividend trap after dividend trap. Now, a dividend trap is a situation where a stock or ETF appears to have an attractive dividend yield, but is accompanied by underlying risks that could potentially lead to a reduction or elimination of the dividend payments. Investors may be lured in by the high dividend yield and consider it a reliable income stream, but there are underlying factors that make the dividend unsustainable or precarious, or on top of that, the overall total return might not be worth it in the end. But what if there was a new higher yield covered call ETF with a new strategy that avoids the bad parts of most covered call ETFs and implements all the good parts? Well, stay tuned because we're going to dig deep into the new SPYI NEOS S&P 500 High Income ETF in this video and show you exactly what it has to offer and why I've been buying so many shares of it as of recently. Now stick around because we're going to go over all this and more. Right after you, please drop a like on this video and subscribe for more future content like this. Before we go deeper into what this new covered call ETF is and how it works and why it might be one of the best out there right now, let's first talk about what a covered call ETF even is. So a covered call ETF is an exchange traded fund that follows an investment strategy involving the writing or selling of call options on the securities held in the portfolio. This is also known as a covered call writing strategy. And in the covered call strategy, the ETF buys a portfolio of underlying securities, such as everyday stocks in the market. But then with those stocks, they sell call options on those securities. Now, a call option gives the buyer the right but not the obligation to purchase the underlying securities at a predetermined price later on in the future. Now, the predetermined price that's agreed upon is known as the strike price, and the agreed upon future date is known as the expiration date. Now, by selling call options, the ETF collects premiums from the buyers of these options. These premiums generate income from the ETFs, so the covered call ETF distributes most of this premium onto the shareholders of the covered call ETF. Now, you're definitely probably familiar with covered call funds like JEPI, JEPI, or covered call funds like QYield, QYLD. But like I was saying during the intro into this video, most of the covered call funds out there are more or less dividend traps. And in my opinion, this is simply due to the overall covered call fund strategy. But unlike the others, SPYI is a covered call fund, but their strategy is much different, which we're going to go through here in a second. So the ETF that I'm talking about is SPYI, or the NEOS S&P 500 High Income ETF. Now, a few basic facts about the ETF. It was started back in August of last year. The expense ratio is 0.68%, and the net assets are around 218 million. Now, the reason on why I love this ETF and why I've been buying so many shares of it as of recently is, for one, because of the ETF strategy, for two, the possible tax benefits, and my third reasoning being how the ETF has performed so far. But looking a little bit deeper, it says targeted benefits of SPYI strategy. Number one, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven call option strategy. So that seems pretty good so far, but seems like pretty much any other covered call ETF that buys S&P 500 and sells covered calls. Nothing all that crazy as of yet. But number two, it says actively managed by NEOS. The fund seeks to take advantage of tax loss harvesting opportunities, in addition to utilizing SPX index options classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. And I took some time and dug a little bit deeper into some of the fund's actual paperwork. Under distributions, it says dividends and distributions. The fund intends to qualify each year as a regulated investment company under the Internal Revenue Code of 1986. As amended the code, as a regulated investment company, the fund generally pays no federal income tax on the income and gains it distributes to you. The fund expects to declare and distribute all of its net investment income, if any, to shareholders as dividends annually. The fund will distribute net realized capital gains, if any, at least annually. The fund may distribute such income, dividends, and capital gains more frequently if necessary in order to reduce or eliminate federal excess or income taxes on the fund. The amount of any distributions will vary, and there is no guarantee the fund will pay either an income dividend or a capital gain distribution. So SPYI takes the tax treatment very, very seriously for this ETF and is trying to do whatever they can to lower the tax bill at the end of the year, which is very helpful, of course, and one of the main criticisms when it comes to investing into covered call funds in a taxable portfolio, of course. Lastly, number three, this is the other portion of this ETF that I absolutely love. The fund utilizes a call option strategy that may include both sold and purchased SPX index options. which may provide the opportunity for upside capture in rising equity markets. So the fact that SPYI looks to sell covered calls on SPX or the S&P 500 and also looks to buy calls makes situations like as of recently where the market has just been melting up. Over the last 6 months, S&P 500 is up almost 10%. In situations like this, funds that only sell covered calls are in most cases going to see the potential for capital appreciation be capped, because that's how it works when you sell covered calls. But with SPYI, because they are selling covered calls and buying some SPX options, they're going to earn massive premium from selling the calls, but also capture some of the upside if the market turns into a melt-up situation like we've seen as of recently. So now that we know a little bit more about the SPYI strategy and some of the aspects that make this ETF very, very attractive to me, digging a little bit deeper into this ETF, it's basically flat as far as price goes over the last year or so, which isn't necessarily great to see. The 52-week range is 44.61 and 50.62, so it's trading pretty close to the 52-week range high, which is why for me personally, I've only been buying a few shares of it here and there, but I will definitely be buying a little bit more aggressive if we get some dips here. Now, although there's not all that much data to go off of historically because this ETF is rather new still, there is actually a very healthy track record of dividends paid so far since the fund's inception date. And overall, this fund has paid a consistent around 45 to 50 cents every single month over the past 10 or so months. And although, like I said a second ago, I would love to see more historical performance and data to give us an idea of most likely how the fund is going to perform in the future, even though past performance is not guaranteed future performance, of course. Overall, the previous payouts have been pretty stable. And once again, the strategy, in my opinion, seems to offer a lot of the good things that most covered call funds have, and avoid some of the bad parts of most covered calls. Now lastly, looking into how SPYI has performed as far as total return since the fund's inception, total return meaning dividends plus the ETF price included. Over the last month, SPYI has returned 1.3%, the last 6 months 9.26%, and year to date, SPYI has returned 16.08%, which again is definitely very respectable. Of course, there's some ETFs that have returned higher and lower as far as year to date goes, but 16% with once again a very, in my opinion, stable strategy, ETF management that's really trying to find a tax efficient route for income focused investors, and overall the track record so far has been pretty good. But I want to hear from you guys down below when it comes to SPYI. Even though this ETF is sort of new and hasn't been around for all that long, is this something that's on your radar? Or maybe even is this something that you've been purchasing as of recently? If you enjoyed this video, make sure to please drop a like down below and subscribe for more future content like this. Thanks as always for stopping by, guys, and I'll see you in the next one.